at philsgang.com. That's philsgang.com. Whoa.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Radio Network.
Oh, God.
Are you nuts?
The chart.
With your host, Phil Grande.
Good afternoon and welcome to my podcast. I'm Phil Grande, philsgang.com. Okay, let's talk a little bit about gold today. Gold has contracted a little bit. Remember, our miners were up 187%. That's right. Since March 2025 to where we are today. 187%. Now, we had that pullback from that 187% of 20%, but that is profit taking. Okay, profit taking. We expected that. Now, I expected, and I told my members on October 10th or October 8th that, and we were up big in our miners, and I said, start taking a lot of your profits because we went and hit 4,100. But it was the next day that I got concerned when the banks came out and said, oh my God, we're going to go to 5,000 an ounce. And everybody rushed into gold. And I said to my gang, Phil's gang, hey, tell them they can have ours. Not all of it, but a good portion of it, okay? I thought it'd be 5 to 7%, but now it's pulled back to 20. But what we're starting to see right now is some basing. Because here's what's going on. The smart money knows that the demand for gold comes from central banks around the world. I mean, central banks are buying gold like crazy. And that's why I like the miners. Now, normally, gold outperforms miners, normally. But that's not been happening in the last few years because there's such demand for gold, and we've never seen demand like this, that you've got to get that stuff out of the ground. So right now, your best bet is stay with your GDX. And that's the one I've had a lot of success with, my gang members had a lot of success with. And again, if you look on your chart, GDX, we're at the 50-day moving average right now. And that's a support. That's a support. If you look at my charts, and my charts are different than yours because in 1998, I designed my own charts. Why? Because I used to get really angry that, these charts, even as of today, the generic chart looks like a friggin' Christmas tree. And it gives you no information other than, oh, it's green, it closed on green, that means we closed on the high, or closed on red, that means we closed on the low. I don't really care unless I'm a day trader, which I'm not. So again, going back to the GDX here, this is not much of a correction, okay? And if it holds the 50-day moving average, and what we're looking for, again, is some basing, and I'm starting to see it. Remember, every morning it's important when you're gold, whether it's GDX or GLD, okay, or POS. Now, POS people are worried about because POS is underneath the 50-day moving average. GLD is much stronger. GLD, again, follows the price of gold, physical gold. And GDX is the minus. So GDX and GLD are doing much better than POS. And I told my members that, and we started to short POS, I think it was about a week ago, just before it started to turn red. We didn't have many shares on it, but I said, at least put some shares on, small amount of shares. So when we do get our confirmation, that's one thing that I like about my chart that I designed a long time ago, 1998. Over 225,000 people have used my chart because it tells you what the money is doing. People get all upset about the stock market. The only people get upset about the stock market are the people who don't know how to sell short. It's impossible to make money if you're going to not know how to short. You got to short. To be in the stock market without the skill to short is really dumb. I mean, you can't make money. And I'm not making a check. You see that 90% of people who are in the stock market never make money. They lose. And it's obvious because all these programs on TV, from Kramer to all of them, always giving you that hot stock. Buy now. That's not how it works. Not how it works. You never make money if you have more than 6 stocks. That's right. The maximum amount of stocks you should have is 6. And the reason for that is because each stock will give you what you call 2 sweet spots during the year. Now, sweet spots are that point in time you got the highest probability of not losing money. It's called the sweet spot. And each stock, you get again, there's 2 opportunities on each stock for this beautiful sweet spot. It's almost guaranteed you're going to make money. It's almost guaranteed you can't lose money because it's that point in time which you have a maximum amount of buyers, huge buyers, in a short period of time. That's the only time on a chart that you have that. Here, let me show you. If you can see my chart. Let's see if I can bring it up for you here. Nope. All right, let me try it this way here. See if I can bring it up for you here. And you see what I'm talking about for sweet spot. If you look at, there we go. All right, here we are, right here. This is called the sweet spot, right here in your chart, right there, okay? It's just a basic stochastic. But what's not basic is how I designed my chart. You notice you're either going to have red, which means pricing is coming down, or you're going to have green, your pricing's going up, or you're going to have yellow, it's neutral, it's not doing anything. You won't see a chart like this. Okay, now there's been knockoffs, and they lie to you. They'll sit there and say, all you need is this chart, and buy on green and sell on pink, and then you're going to make a fortune. No, when I designed the chart is to assist your charts, okay? It gives you that extra tool. It's like a carpenter, right? I'm always fascinated about carpenters or plumbers. They come to the house to fix something, and the tool, they always got this little neat tool that fixes the problem. It's always amazed me. I love watching them work, right? Because it's the tools that do the job. It's the same thing with trading. It's the tools that make you money. So this is a tool I designed in 1998. 225,000 people used it or use it. What? I mean, it works. So here's the sweet spot again. And that's what's important. Once you get outside the sweet spot, so you can make it a sweet spot, anywhere from a return of 5% to 20%, okay? And the beautiful thing about the sweet spot, there's very little danger in there you're going to lose money, okay? Very little danger. So you can grab 9 or 10% in the sweet spot, and then once you get out of the sweet spot, you go what they call risk on. Remember, the sweet spot is risk off. You get out of that sweet spot, it's risk on. And then we train our students to identify there's 5 basic signals to sell. 5. To buy, buy. It's what we call on our line chart a W, it looks just like a W, a V, and what we call engulfing. If today's candlestick on your chart is engulfing yesterday's candlestick, that's a buy signal. So a V, a W, engulfing. There's 3. 2 other popular buy signals are a consolidation, where the stock goes sideways for quite a long time, then it breaks out. My favorite is called the flag. Okay, it looks just like a flag. And when you get a flag pattern, you're lucky because those things just take off. But my point is, with the chart, I don't want to lose my point here. It's all about following the money. Everything's about following the money. So get back to my goal, I'm getting off of it. Since March, as I said, 2025, miners have gone up 187%. We pulled back 20%. We're not going to lose demand because you're not going to have the central banks changing. So I don't think I'm going to buy any gold anymore. They don't want our treasuries. They certainly don't want our dollar. Okay, who wants our dollar? Nobody wants our dollar. And they certainly don't want our treasuries. They don't buy our debt anymore. If you take Japan and China and the UK, our big lenders, they don't even buy anymore. They very seldom do they want to buy. Why would they want to give us money when our national debt in deficit is insane? I mean, insane. Who wants to? We have a national debt of 38 trillion. That's 123% of our growth. That's insane of GDP. We're broke. Corporate debt is historic, 22 trillion, 69% of our GDP. So, and then our total debt, including our national debt, that's 100 trillion. That's 324% of GDP. So gold is going to be with us a long time. But you should never be fearful when you see it comes down like it did after going up 187%, our GDX, and it pulls back 20%. Don't be fearful. You won't be if you know how to sell short. See, there's no such thing. Once you learn how to sell short, you know how to go long, everybody does that. But once you learn how to sell short, what a difference it makes. Because there's no wrong decision. There's no right decision. Because you're following the money. If it comes down, you're going to make money. If it goes up, you make money. If right now when stocks come down, 90% of people lose money. It's crazy. It's insane. So in gold, remember, there's going to be a lot of tension here. The central banks are one thing. But we're going to be getting this tension, continued tension between China, okay, and us, the U.S., especially over this rare earth. And you've got two huge egos, okay? Trump and this other guy, what's it, Xi, I guess he is called, the president of China. These are big egos. And so thank God they get along. But this is going to be a real problem. So gold is going to go up because China is not going to change their position on this rare earth. And if it's not rare earth, it's always going to be something else. So that's why gold, the miners. Now, I know a lot of people like to buy gold bars and they like to buy the physical gold. There's nothing wrong with that. You can find a place to store. It's a pain in the ass. And it's you put gold in your home. That's the worst thing you could do. And so I like the miners. You just go on your chart, and here, look at, for example, if we go look at GDX right now. Let me pull up GDX for you. Now, GDX right now, okay, as I said, she pulled back about, I think it was about 20%, okay? She pulled back 20%. Now, we've seen, like today, for example, that in the last couple of days, we're starting to see buying come back in. Because smart money knows what I just told you is the truth, that there's going to be a big demand for gold because the big, as I said, the central banks around the world are very nervous about what's going on between the U.S. and China. We also know, as I said, China and the UK, okay, and Japan, they don't want to loan us money, okay? When they send us goods and they get dollars, they don't want the damn dollars. Okay, they want gold. They want gold. So again, don't panic on your gold. Now let's talk about the banks. What the banks are doing. The banks are doing terrible. And remember when they lied to us during the earnings season, and I pointed this out to everybody. I said, don't get caught up in the hype. Remember, they always have the banks report first. Why? Because they can manipulate the banks. Because all they have to do, let's say a bank forecast they're going to make $1 million, but it only came in with $500,000. Uh-oh, how do they fix that? All they do is take their set aside, money set aside for losses, and let's say they got $2 million, $3 million, they'll move $500,000, shift $500,000 over to their bottom line. Oh, look, we hit $1 million just like we said we would. I mean, it's ridiculous, but so again, if the banks aren't doing well, and if you look at the banks the day that they report when their earnings came out, then they're the first ones to come out. They've never there's only a couple that are doing well. Let me pull them up here. There's only a couple that are doing well. I mean, the banks overall are a total disaster, okay? A total disaster. If we look at, let me find my, I'll give you here. I think the best one right now, I think, is Morgan Stanley. I think that's the one that we've been doing the best with. Let me get my chart up here. Here we go. Okay, so let's take a look at right now Morgan Stanley. Okay, Morgan Stanley. So Morgan Stanley, remember when the numbers came out on Morgan Stanley, and that was, I think it was October 10th, isn't it? Wasn't it, Willie? The 10th thing reported? On October 10th, you look at Morgan Stanley on October 10th, that thing gapped up. Did nice, but then it pulled back. That's why you never chase these things with these big gaps. And now the people who chase them, for example, the low on that October 10th was $151.94. It gapped, meaning it skipped trading, okay, between the high of 157.95 to a high of 166. So they skipped that trading. People that bought the FOMOs, oh my God, have they lost money. We'll talk more about that, the banks, when we get back, and what stocks you should stay with.
Show? Go to philsgang.com or give them a call at 877-600-GANG.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from, all that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
What does it take to be a successful investor in the stock market? Developing your skills and learning from an expert like Phil Grande and philsgang.com.
It doesn't have to be hard or complicated to learn how to invest in stocks properly. It's like anything else. You're going to golf, or you're going to learn how to play tennis, ski. You need to be with someone, learn off of them, one-on-one. Now that can be really expensive, cost thousands of dollars, but I have a program that you can join for 10 days free.
Go to philsgang.com and sign up for a free 10-day trial. Phil Grande has developed tools to teach you how to invest in stocks properly. Not only when to buy stocks, but how to sell stocks short.
85% of people in the market lose money. Get out of that group by just joining Phil's gang.
Now you can learn to invest like a pro with a pro, Phil Grande. Take advantage of this special offer for a free 10-day trial at philsgang.com.
Try it. 10 days free.
That's philsgang.com.
philsgang.com.
Welcome back. Learn, invest, and make profits with Phil Grande. Simply go to philsgang.com. Now, here's Phil.
Okay, and welcome back to Phil's Gang. All right, so we're talking about gold. We're talking about banks. Banks are weak. I just, again, a lot of these banks, I mean, if you take a look at BAC, which is breaking out today, but it's very, very weak. And you can see on my chart here, all the red. That's telling you there's, see, your chart doesn't show that, but my chart shows all, because we designed our charts, especially. And it's showing us there's not a lot of buying going in, okay? See the red there? Even though the stock's going up, there's not a lot of buyers to support it. Even though it's above the 50 and 200-day moving average, it's telling you there's still not a lot of buyers, not enough. So again, the last thing I'd be doing is jumping at BAC. Citibank, okay, again, it's having its trouble. It's never gotten back to its peak, okay, of September 23rd. Morgan Stanley, now that one has gotten back to its peak, okay? And the only thing we're missing with Morgan Stanley right now, we need more volume. So they're not clean. We don't have clean patterns with them where you look and go, oh, man, that's a great pattern. That's being supported by a lot of money, okay? when you don't have something like that, you just know you got a real, I mean, for example, I was telling my students today, if you have a stock, let's say that's at 259, and let's say the stock drops down to 200, and it starts going back up again, don't buy that stock. Now, everybody thinks, well, I'm going to buy in a dip. You're nuts. Because if you bought at 260, or let's say you didn't buy, you're standing back, and you see it drop from 260, okay, down to 200. Now you think, gee, I'm going to buy in a dip. It starts going up. But between let's say between 200 and 260, those are all sellers in there. They're all sellers. You got to fight through those sellers. See, everybody thinks buying a dip. No, you're better off buying the stock that has a new high. Like, let's take NVIDIA. NVIDIA is one of our best stocks. She broke out nicely today. She took out the October 10th high, doing beautifully. We had a big W formation, totally green, great volume. So our stock's doing well. But you're better off buying NVIDIA today as it broke out and went through, okay, the 195.62. It's now at 202. Always buy the stock that's breaking out because you have no sellers. It's a hard habit to break. People make this mistake all the time. It's such a hard habit when the stock drops. I mean, even take a look at Alibaba. Now, Alibaba is now at 177. Now, remember, Alibaba was at a high October 2nd of about 192.67. It dropped down to a low of 157. Now, people started to buy it again. But my chart shows you, no, it turned from green to red. And we can see more money's coming out than going in. But let's say it was all green. There was no red, and you were at 177. And the high you got to get back to is at 192.67. So 99.9999% of traders will make a mistake, and they'll start buying the stock. Let's say you start buying the stock at, let's say the high again is at 192.67. The stock drops down to, let's say, 157. Now people start buying at 157 thinking, oh, I'm going to go from 157 up to that high of 192. I'm going to make a lot of money. Why would you do that? Because in between the low of 157.25 and the high of 192.67, you got a tremendous amount of sellers. They're still dumping. They're selling. Why do you want to go in and fight them when you could go in today and you could buy Google? This is one of our stocks today, Google. Google's breaking out. It has no sellers above them. So aren't you better off being in a stock where there's no sellers above you? You just got to go fight. Here's another one. See, it's just the opposite of what people think. NVIDIA, again, look at that, broke out for us. It's one of our stocks. We're doing beautifully. We have nobody above us selling. See, those are called power stocks. Those are the stocks that do the best. But people can't get that through their head. They think because you've been taught that way by Wall Street. Stop listening to these financial shows on TV. If the stock dropped from October 10th from 195.62 and it drops down to a low of 176, again, why would you start trying to go from 176 back up to 195? That's insane, because you have to fight all these people that are selling. And every time you go up, then it comes back down a little bit. You go up and it's frustrating. It comes back down again. But if you waited today for NVIDIA, let's say that's one of your 6 stocks, NVIDIA, right? Look what you bought it today. It's one of your 6 stocks. You've been managing it, watching it. She breaks out. My chart's green. And you don't have to worry. You don't have any sellers above you. Okay, let's talk to you about some other stocks. So we know that everybody's tech crazy. They've gone nuts, okay? And we know the most important stocks are the semis. Semis is it. I mean, semiconductors is AI, all right? We know that, all right? So the best thing to do is always stay with the ETF, the ETF. They'll tell you not to do that, Wall Street. You can't make money with ETFs. That's a bold-faced lie. They tell you that because they can't make money. They want you to be an individual stock. And, oh, don't you dare short. Oh, you short, you're going to lose everything. No, you're going to lose everything if you don't short. So let's take SMH. This is one of our favorite stocks. And another thing happens, if you can see this chart. Another thing happens. They'll intentionally drop the stock. For example, on October 9th, the market maker drops the stock. It was at the high of 346.49, and they dropped the damn thing to a low of 324. People start panicking. Get me out, get me out, get me out. And I said, no, don't get out. That's a ploy. That's what they do. That's what Wall Street does. Because when Goldman Sachs, J.P. Morgan, they have a book, and they look and they own SMH, and they look and they got, oh my God, they got 100,000 that they have to fill, 100,000 orders, okay, they have to fill. But they don't have enough shares. So what do? They'll paint the tape, scare you, and you'll see the stock, as it did here on October 10th, drop from 346.49 down to 324.83. But if you were my member, I would have told you, no, we have no crossover. We have no confirmation. See, on my charts, I give you a confirmation. It will tell you if it drops like that big, it will identify for you immediately. Wait a minute, is this a head fake? Is this a head fake? And we could see it was. That didn't drop because investors are dumping. Again, SMH semiconductors didn't drop from the high of 346.49 down to the low of 324 because they're dumping. No. That was created because, let's say, J.P. Morgan has more orders, but they don't have enough stock to fill the orders. So that's what they do. They paint the tape, drop it, and then she goes right back up. But you always know that. If you're with me, you'll always know that, okay? Because we show you how to identify that if it's a head fake. So, but the semiconductors, Micron Technology, again, another one of our favorite stocks. We had two beautiful patterns, buy patterns. We had a consolidated pattern with a breakout, and then we had a flag pattern with a breakout. And again, why would you want to buy another stock? If you're an MU, we're making new highs. There's no sellers above us. But this is where your money is going, okay? Everybody's going to AI. So if you stay with Intel, if you stay with Micron Technology, if you stay with SMH, where you own all of them, you're going to be with us and make money continually because that's where the money's going. Don't, flub double around when they give you some stupid stock on CNBC or Kramer or all these hot stocks. You don't want a hot stock. You want a stock that's making new highs, has great volume. When the market comes down, it has relative strength. You can spot it. It doesn't go down. Then it starts making new highs. You have no sellers above you. That's a beautiful power stock. And so the semis are where you got three stocks, SMH, the ETF, MU, Intel, they're all doing fabulous, okay? Intel I gave this to my gang the other day, had a wonderful, look at this, consolidation pattern with a breakout. Beautiful. So stay away from these buy on the dip. You're out of your mind, buy on the dip. You're going to get yourself killed, okay? Apple, another one. We had a head fake. Yes, look at this, October 10th. The market, Apple, people said, get me out. On October 10th, we opened up in the morning, we were at 256. It dropped immediately to 244. What the hell happened? Why are they selling? Get me out. I said to my gang, no, get ready to buy. Not out. Because look at our chart. It's still solid green. And not only that, there's no crossover. We call it a crossover. Red goes through yellow and it's this red line. I mean, the chart that I designed is so simplistic. It's so easy to follow. So my members didn't get caught. Who got caught? The FOMOs. The FOMOs always get caught. So again, remember this. You have the semiconductors, most important. Then you have the chip makers. Now, the most important semis are your ETF, SMH, Micron, and Intel. You stay with those three, you'll continually make money. But if you know how to sell short, you don't need any more than those three stocks. Because when they start going down, you're going to short. The people who make a lot of money consistently in this business are people that have no more than 6 stocks, and they know how to sell short. They know how to sell short. What a difference that makes. Now, we also have, again, in this group, okay, that everybody's getting excited about, if you have the chip providers, that's NVIDIA, AMD, and Intel. Think of that, the chip providers, NVIDIA, AMD, and Intel. These stocks are doing very nicely, okay? Why would you need anything more? Now, I don't trade AMD because it had a big gap. What's that mean? It was the stock was at about $170. And the next morning, it opened up from 170 to 203. That means it skipped trading from the high of 170 to 203. There was no trading. It just skipped up. It gapped up. That's very dangerous to get in and buy those. That excites everybody. When someone's in a stock, opens up in the morning, it closed the night before, the high was, let's say, 170, and all of a sudden, market opens in the stock, all of a sudden, bam, it's up at a high of 226 from, let's say, your high of 170. This is where people get slaughtered. Now,
2 minutes.
Now, at some point, what's going to happen is that gap between the high of October 3rd of 170.68 and the low of October 6th of 203, that's going to come back and get filled. That's right, they're going to back and fill it. So if you're buying today, let's see AMD at 259.95, you could wake up tomorrow morning and your stock could be down to $200. That's the danger in buying stocks that have gap ups. These gaps, they gap up. Never buy stocks that have a gap up. Why would I want to buy the stock that has a big gap, that has a continuous red flag? It's dangerous because one morning you can wake up and all of a sudden your stock drop 10, 15%. That won't happen on NVIDIA. That won't happen on AMD. Intel. That won't happen on Intel. Won't happen on Apple. Because why? Because there's no gap. They're making new highs. And they got a lot of volume. Now, so just keep in mind, you want to buy the chip providers, okay, which are NVIDIA, AMD, and Intel, and you want to buy the smaller ones, which are Apple and NVIDIA, and then you want to buy cloud providers. So you want the chip providers, and the best ones are NVIDIA, AMD, Intel. The cloud providers are Microsoft, Google, and Amazon. And then the next one you want to buy is they call it infrastructure support. 2 stocks, AVGO and MOO. They're all in the semiconductor group. And that's it. That's where 95% of the money is. That's where they all go, right in those stocks. That's AI. That's AI. So we can help you with all this. So just join our gang, philsgang.com, for 10 days free. And learn how 6 stocks can make a ton of money for you, okay? Just 6. See you on the charts.
You have been listening to Phil's Gang with your host, Phil Grande, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.